shares, and they go and they buy Bitcoin with the money that comes in that private placement. That Bitcoin cannot come back out. There's no redemption feature of those funds. And so that's not going to go back into the market in kind of what I call the addressable circulating supply. Also, when you have corporations, Square, MicroStrategy, and others putting it in their treasury on their corporate balance sheets, that's not coming back out into the market. And so what you continue to do is people are basically taking Bitcoin off the market. And so you don't need tons and tons of new interest. But I actually think that we're underestimating the psychological shift that investors have gone through. The U.S. government just ran an almost $4 trillion marketing campaign for the devaluation of the U.S. dollar. And investors are listening, they're paying attention, and they're choosing to move their capital into an area where they can protect their wealth. And Bitcoin serves not only a store of value, perspective, but also an asymmetric type potential return. And I think that we just haven't had an asset like that. And as people wake up and understand it, you're going to continue to see more and more capital flow into this asset in the coming years.
You know, Kevin, it doesn't sound like your buddy from Shark Tank, Mark Cuban, thinks it's a nothing burger and irrelevant. I just saw a story last night when I was reading up to prepare for this segment. Headline: Dallas Mavericks offers special merchandise discounts for Bitcoin buyers. So, I mean, that's another arena, pardon the pun, where you could see legitimacy to Bitcoin from people like Mark Cuban, your buddy, who are trying to make this a more relevant part of people's lives.
You know, I know Mark quite well. He also was quoted saying he thinks bananas are a bigger common currency, and he's probably right. I want to go to Pomp's issue about this idea that you're protecting your capital buying Bitcoin. There is no evidence that it has a reverse correlation to correcting markets. Last March, if you owned Bitcoin, you got slaughtered, and you had a lot more volatility than the S&P. My whole point is there's a lot of interesting ideas here, and certainly the fact that a Bitcoin, all the other ones haven't worked, but Bitcoin has. This concept of a digital currency is one that would work, and my whole point is, for all of us, including you, Scott, who monitor and work within the financial services multi-trillion-dollar global industry, is this a nothing burger? It's not even a single-cell amoeba. If you took all of the market cap of Bitcoin, totally irrelevant. I love to talk about it. You know, it's fun to watch it go up and down. But during the day, when the bell rings, I don't talk to anybody that's worried about this. They do not put capital to work in Bitcoin. Maybe it's fun if you're an individual high net worth person that wants to just play with it. But the financial markets deal with regulators, and you can only operate within the confines of those rules. And so when we glorify something like this, it really has nothing to do with the financial markets that make the whole world work. And no institutional or sovereign fund investor I've ever talked to has said to me, go index all of the cryptocurrencies for me. And the reason they don't want to own that is they fear the regulator. And watch what happens one day. And I'm waiting for this one. I'm waiting for the day that one of these regulators comes down hard on Bitcoin. Grown men are going to weep when that happens. Well, you'll never see a loss of capital like that ever in your life. It'll be